We're seeing some rotation potentially in the markets, and the question will be, of course, whether that rotation is going to be continued. Is that going to be the new theme for the year? Or is this a temporary rotation that then goes back to those disinflationary trades for the markets, which tends to be technology, communications, discretionary? Here's what you need to know before the bell this morning. Santa did fail to visit Broad and Wall, and of course this decline over the last 3 trading days has taken out that entire rally that we saw going all the way back to the beginning of that Santa Claus rally. The question, as I said here, is kind of what happens next. And again, the markets are still kind of set up here for a bit more correction. We're still on a solid sell signal right now on our MACD indicator, which is at a fairly high level for the markets. We are finally working off some of that overbought condition. We're not done with that yet. But we are starting to work off that overbought condition. So that is getting to a point to where we could see a little bit of a bounce in the markets. And the question will be, can the markets kind of get their feet back underneath them and start, kind of rallying, for the new year. Again, the first 5 days of January tend to portend to the rest of the month of January. So goes January, so goes the year. That's really kind of the look for the markets right now. Again, not completely oversold here yet, but working off that overbought condition, that sell signal in place. So that may keep pressure on markets here over the next few days, in particular as we kind of work this off. But we are getting finally, that bit of a correction that we needed, to try to give you a little bit better opportunity to put some capital to work in the markets and, in companies that you like. Importantly, though, if you take a look at the number of stocks trading above their 50-day moving average, that's still at a very high level. So despite this correction, we haven't really reverted a lot of that, very bullish backdrop. And again, when you have a large number of stocks trading above their 50-day moving average, that typically tends to equate to market peaks. Again, kind of where we are in the market's kind of peaking here. But again, that doesn't mean you're going to get a big correction, but we could see a little bit more pressure on stocks really kind of across the board. So far, a lot of that selling pressure has been really kind of fostered in the tech stocks that rallied the most last year. We've seen a good bit of pressure in Apple and Microsoft and Tesla as of late. Sectors that have been doing a lot better this year so far have been some of those beaten down sectors last year that we've talked about a lot. Healthcare, energy's been performing a little bit better here at the beginning of the year. So we're seeing some rotation potentially in the markets, and the question will be, of course, whether that rotation is going to be continued. Is that going to be the new theme for the year? Or is this a temporary rotation that then goes back to those disinflationary trades for the markets, which tends to be technology, communications, discretionary, which tend to have the highest earnings capacity. And particularly as we look at earnings growth in 2024, expectations of those earnings, the vast majority of the growth in earnings are coming from those disinflationary sectors. So the question will be now, is this rotation we're seeing now, is that sustainable in a more disinflationary environment, if that is indeed going to be the case that lays out this year? And again, that's going to be a big driver of Fed policy as well. That's what you need to know before the bell this morning.